What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL. But the trading and the charting method that we implement, you can use it to trade any company that's publicly traded on the U.S. stock market. Make sure you hit the like button if you enjoyed this video. It really helps the channel grow. Also, make sure you hit the subscribe and notification buttons. That way you are alerted to when we release new videos. We release videos Monday through Thursday throughout the week and once on the weekend, but from time to time we do drop bonus content, so make sure you have the subscribe and notification buttons hit. That way you are notified when we do release that bonus content. Our nightly and weekend videos, like today, are focused on identifying the triggers and the targets for trades ranging from just scalps and intraday trades to long-term swing trades as well. So if you want a deeper dive into how exactly we set up our charts, the color coding that we use for the different levels, the different trading levels we use, check out the bonus content on our YouTube page. And for more information about the strat, which is the base of our trading and charting method, you can find more free information in the description of this video. So I encourage you to, watch the full video, because along with the triggers and targets, we give some pretty good insight into the price action on all time frames. So with that, let's get into the agenda for today. We'll go ahead and recap today's price action, and then we will zoom out like we always do and look at the week, month, quarter, and year. And we will zoom back in to set our 4-hour markers and the triggers and targets for Tuesday, along with a quick review of the triggers and targets for the week, the month, the quarter, and the year. So just looking at today's intraday price action, looking at it at a 5-minute time frame first, from the scalping perspective, we can see the major levels that we've got on the chart here. Down at the bottom, we got previous low of day, then we've got the overnight low, overnight high, and the previous high of day. Sorry, I apologize for here. And we also have honorable mention, I guess we call it, the 50% line of last week at 38.94. Last week, that 50% line, a lot of weeks, that 50% line is a major bounce point. Last week, it actually acted as just more of a magnet. It did bounce off of the level, but it stayed pretty close to that level. So we'll want to watch the 50% of last week, this week, to see where things are at. And not far above, because last week was an inside week. We've got 41.93 as last week's high, the solid purple line. Then as price opens, we mark our opening print. So we see the first trading price was 41.16. It did create a small gap up. That's what this turquoise box is. And we can see that aside from the initial gap up in that first push in the first 5-10 minutes, there wasn't a whole lot there to be had from an upside or downside. Just moved sideways, right? So we got the push up. You can see we did get the higher low here. So you could have entered calls right here because we're above opening print. Again, the general rule is higher lows above opening print, we get into calls. Lower highs below opening print, we get into puts. So you could have entered calls here, wrote it up, and you see we got the higher low, but then followed by the lower high. So as soon as we got the that locked in the lower high, you would want to exit your position here. So 42.74 to 42.27, about a 50-cent move. If you got multiple contracts, you're at the money or in the money, then you should have made a decent profit there. But then for the rest of the day, there wasn't really anything. It drifted a little bit lower, but overall it just went sideways. So even when zooming in and really looking at it in a zoomed in perspective, even on a 5-minute, not a whole lot to be got here. So that's really it for the short-term time frame. Let's look at the day chart. Let's bring up a little more clear chart here. And we can see that we have the 11 weeks of sideways action between 24 and 28, the push up, slight pullback before a further push up. We've got these Fibonacci extensions here from the April 7th low to the July high, and then the July pullback that created a bull flag. And so we just have the extensions here, and we can see we've rejected off of basically the 100 fib extension once a couple weeks ago. So We're looking at that as another possible rejection point. You can see how we've already got a wick developed on today's candle. Again, today's candle is green. We've made a higher high, locked in a higher low. So just strictly from a candle structure perspective, there's, it's looking still pretty bullish, right? Not extremely bullish because of this wick that we've got. It's showing that it explored price higher but was pushed down, and still back within this range that we've been in since October 5th, 6th, right? So here we are 15 days later, and we're still, kind of in that range, being rejected by the top of that range. So does this turn into another situation kind of like where we went from between 28 and 24 for 11 weeks sideways? Maybe we go between 43 and 38. We'll call it 38. Maybe this becomes a sideways zone that we get into for a couple weeks. You can see we're running up against this weekly broadening formation, this purple line, the daily broadening formation, the orange line, the 100% fib extension on the bull flag from the April 7th low. So we've got a lot of resistance points here. We'll point out again, the market maker's expected move high for this week is 45.80. If you're not familiar with that level, then check out our weekend or our nightly videos. That's where we dive into the market maker's expected move. If you want the expected move for the week, you want to look at the weekend video. So go ahead and check those out. But you can see it also lines up pretty close to the 50% line of 2024. So we've got a lot of points of resistance here. So not unexpected to see some sideways action. We've talked about that already. We did say even if we get even more of a pullback than we were getting here, if this Friday's low wasn't locked in as a higher low with today's price action, then we talked about how an even further pullback wouldn't be the end of the world. Excuse me, it'd be just kind of testing the top of this second breakout point. And even pulling back to this 29 level wouldn't be the end of the world either, because if we take a look at things from the week perspective, let's get a better chart here. We can see that we can come all the way down to the 2350 level before we make a lower low on the week perspective. So we're continuing to push up. We're just riding this weekly broadening formation. We're kind of running into this weekly broadening formation. We've got the you can see here how there's got the April 7 low to the July high, and then we've got this little pullback and the flag that gets developed. You can see we've got the fib extension of that, and that's the expected move for a flag, right? You take the distance of the pole and you add it to the top of the flag, and that's what your target is for a further push from the bull flag. So we've basically reached that level, and we just need to see how things are going to start to play out here in the future as we come up against this resistance. Are we just going to move sideways and then maybe get the slow creep up, or are we going to get a more meaningful pullback, right? We left a gap today, and then we've got a couple more gaps down below that aren't too crazy of levels to drop to fill, right? Those are still above the 2350 level and still above this flag. So could we have a full retracement? Possibly. And even if we do, it's not the end of the world, because again, we're looking at the week perspective. That's still could be a higher low on the week. Let's go ahead and take a look at the month. Excuse me. And we can see we're still in this two up very handily in force, right? Meaning that the close today is higher than the close, the high of last month. So we're still pushing with the two up, just making this V-shaped recovery. Again, from a monthly perspective, we would take those weekly broadening formations out of the picture. We do have this 50% broadening, 50% of last year that will be a level where we'll probably see some more corrective activity, sideways activity, possibly a push down from here before maybe making a higher low and continuing to push up. If we do just push through that level, I would think it's to just close this gap, and then we might see some retracement. But I do expect this 46 to 50 level to be a level where we see some sideways or possibly rejection here, to get a little bit of a push down, to get a higher low from a monthly perspective, right? So we've had this great push up, a soft higher low here, but it'd be nice to get another higher low on the way up, if we do get that pullback. From the quarter, again, we're looking real good from the quarter. as long as we're above that 36.15 level, which is the high of this 2 down, right? We're still in this 1 combo 2 down, combo 2 up, right? So staying above this level keeps us in the strat reversal, the 1 2 combo 2 down, combo 2 up. The magnitude for that move is not the high of the 1, but the high of the candle to the left of the 1, which is at 70.08, right? So I'm not saying it's going to happen right now this quarter just because it triggered on the quarter time chart, right? But that's just the magnitude of the move whenever it does finish, as long as we stay above that 36.15 level. And then from the year perspective, for if you are familiar with this channel, oops, what's going on here? You know how we've turned this. Come on. What's going on, Thinkorswim? There we go. We turned this 1 2 up 2 down. We've turned it around into this solid green hammer. It's getting, the body's even grown. It's getting a little past the hammer, right? It's getting to be a pretty solid green bar, right? So not only did we reverse the year, but we put in what looks to be right now is a higher low, and again, the closer we close to the high of the month, or I'm sorry, of the year, the better chance we have of going 2 down, 2 up next year, which the magnitude of that move would be 70.08, which ties back into that 1 combo 2 down, combo 2 up that we looked at on the quarter. So again, everything looking good from a high time frame perspective. Nothing to really worry about. Nothing is really breaking down, and we just want to continue to monitor any calls that we have that are January 26 or expire sooner than that. We want to continue to just monitor those and make sure that you know where you are in terms of profit, right? When you bought, how close to the April 7 low did you buy? The further away from the April 7 low that you bought, you're going to be in less profit, and you're going to need to definitely watch that week perspective, because although there's a long ways to go to put in a higher low, that doesn't mean that we'll just get a quick 2 down on the week and then push straight back up. We could have a pretty decent pullback, right? So you want to protect yourself against that. So at the very least, continue to monitor that week perspective. So let's go ahead and look at tomorrow. We'll look at the scalping perspective first. We can see here we've got our previous high day. Currently, the overnight high is 42.35 and the overnight low is 42.8. I'm pretty sure one, if not both of those, will move overnight, so those will be in a different place. And then down here, we've got the previous low day, which ties into the week flip, which is 41.16. That's where the week's price action opened, and any price action below 41.16, the week is red. Above 41.16, the week is green. All right, so just looking at this again, general rules. Wherever we open, we want to look for higher lows above opening print, and we want to look for lower highs below opening print. Right, so say we open here at 42.16 and we get a higher low here. You want to enter as close as you can to when that higher low triggers, and your first target would be overnight high and then previous low a day. Now again, I'm pretty sure overnight high is going to move overnight, so let's say we get a good push up overnight, and let's change the open price, right? So this is a little better example, right? So if we open here, we get a push up, maybe a little rejection off of this 15-minute broadening formation, push back down, then a higher low. Then we want to enter calls, and the first target is going to be previous high day. Second target is going to be overnight high. Same in reverse, right? We open here, say we push down, we bounce off an overnight low, we get a push back up, but we get a lower high underneath opening print. Then we want to enter puts, first target overnight low, second target previous low a day, and of course you've got your gap down here to the downside. So that's what we got from a scalp perspective, right? That's how we can make a consistent profit, especially in the morning, right? A lot of times you'll get those moves on the 5-minute chart, and you can enter on a pretty high percentage chance move to make that money, as long as you're following the rules. So looking at this from a more intraday trading perspective, let's look at the 4-hour here. Actually, let's get a clean chart. There we go. So we can see we got last week's high right here, last week's 50%, last week's low. So just so that we have those on the chart, we do have this daily downtrend line that we had just put on the chart just to to see how it aligns with the weekly broadening formation. Again, not too much weight in the downtrend and uptrend lines, but when they do crossover at the same point as a broadening formation right around current price action, then you want to kind of pay attention to those, right? We've got this 4-hour broadening formation going up here, so you can say we've kind of rejected off of the 4-hour broadening, or you can say, you know, the downtrend, we haven't fully pushed above it till we get that higher low above it. You can say that this weekly broadening formation is hooking us. It's just a little wick up before we get pulled back in. But you can see that we're contending with all of these points of resistance. You've got that 100% fib extension that I talked about earlier, the daily broadening formation, weekly broadening formation. So even if we do get the push up, you might see more of a grind up, or you might see what we saw last night, or more throughout the week, where we get those gap ups overnight, and then that sideways action during the day, or a slow grind up during the day, but those bigger moves happening overnight. So just want to keep an eye on that as well. It may want to entice you to look at swings, over one night swings, instead of just more the intraday play. If we look at the 1-day chart, again, we did get the 2 up, making the higher high, locking in the higher low. Oops, let's go to the right chart here. Right, so we locked in the higher low right here. We've made a higher high from a day perspective. So we just want to look for further action to the upside. Again, we've got that fib extension, daily broadening formation, market makers expected move high right up here with the another weekly broadening formation. So just watch for a slow grind. Don't expect too much during the day as we fight through those levels. To the downside, though, we've got a little bit of space that we can retrace before we hit major levels of support, like last quarter's high 35.49. That would be a big bounce point that would line up with the 61.8 fib of the fib extensions from that bull flag that we've been talking about as well. So just want to keep in mind that price can go either way, and we'll be ready whichever way it goes. So let's go ahead and just look at our notes and the hard numbers for tomorrow. We talked about the scalping, how we use the opening print, overnight high, previous high a day, overnight low, and previous low a day. So I won't have those triggers and targets on here. Those you got to kind of play more on the fly. But we can see for Tuesday, October 21st, we've got 48 trading days left. Today's close price, or Monday's close price, was 42.24, and we can see that the week flip is at 41.16. So we know the week goes red if price goes below 41.16, and then we've already known about the month, quarter, and year for some time now. So we've got the week's expected move plus or minus $5.52, giving us a range of 45.81 and 34.77. I don't know why I've got a range in there. I must not have taken that out from last week. But anyways, we know where our gaps above are. We know where the gaps below are, including the gap that we just made from last night. All right. So looking at the 4-hour time frame, if we go to the downside, that would trigger a red 1, 2 down, triggering at 42.11 with a magnitude of 41.13 and an extended target of 40.80. Right. To the upside, that would give us a 2, 1, 2 up, triggering at 42.74 with a magnitude of 43.04. So not quite as much magnitude to the upside, but we do have the extended target of 43.80 there. That's that 100% fib extension of the bull flag from April 7 to July. On the day chart, we would have a 2 up, 2 down if we go to the downside. So if price goes below 41.13, we've got a magnitude of 38.32. Now that's in the face of an uptrend. So we like to, because that move is pretty big, a $3 move essentially, give us an intermediate target that we could possibly bounce at. So if price does go below 41.13, watch for a bounce at 40.29, but if we do get the continued push through 40.29, the magnitude of that move is 38.32. Now to the upside, it wouldn't trigger a reversal. We're just triggering a continuation pattern, so that triggers at 43.04 with a magnitude of 41.93, and then we've got the extended target of 42.84 and 43.37. All right. So that's what we've got from a intraday to day to overnight swing perspective, right? On the week, we've already gone through the week, month, quarter, and year charts, so I'll just stick to the notes here on the triggers and targets. We did trigger the 212 up because we went above 41.93. Now the magnitude of that move is 43.37. We haven't quite reached that, so that's what we'll be looking for. And if we do reach that 43.37, we look to have built some momentum by that point and look for an extended target of 45.67. If we really get rolling, then we've got 46.79 as an extended target. Now, if we were to reverse around, because again, we're very, very early in the week, only one day into the week, if we were to make a red 3 or a bearish engulfing candle on the week, that would trigger at 35.95. It would have a magnitude of 34.17, extended targets of 33.18, 31.36, and 30.68. So we've got levels marked out to the downside if things were to take a reversal off of the very quick 212 up at the first day of the week, right? We talked about how on the month we've triggered the 2 up. We triggered at 35.49. Excuse me. We've hit our first target of 41.19. Looking for that second target of 43.80, and extended targets of 46.79, 48.79, and 50. Right. From the month perspective, to get a red 3 or a bearish engulfing, we'd have to go all the way to 28 or 23.80. So not close to doing that right now. If we start to move in that direction, then we'll talk about that more then, but no real point of going over those triggers and targets. On the quarter, again, we triggered the 2 down, combo 2 up at 35.49. It reached that magnitude of 36.15, which then triggered the 1 combo 2 down, combo 2 up, and we reached the first target of 38.89, second target of 42.04, looking for that third target of 45.54. Now remember, that magnitude of the full move is 70.08, so that's a huge move. That's why we've got all these extended targets here on the way up to 70. So again, looking very good from the quarter perspective though. And then on the year, we turned things around because it did trigger the 1 2 up 2 down, which had a magnitude of 621, only made it to 723 on April 7th. So made a higher low so far, and again reverse things in a very solid green hammer on the year, and looking to continue to close at that high so that we can trigger the 2 down 2 up next year, looking for that 70.08 target as well. All right, so those are the triggers and targets for the scalp to the year, and I hope everybody enjoyed today's video. If you did, make sure you give the video a like, give it a thumbs up if you made it this far. I appreciate you for continuing to watch, and I hope everybody gets some good rest tonight. If you're watching this in the morning on Tuesday morning, I hope you have got some good rest tonight or the previous night, and hope everybody's just refreshed Tuesday morning, ready for a good day of trading. Today was a little bit boring with the sideways action, but you never know when price can break. Always keep your eyes on the news, and it's a very headline sensitive market right now. So just continue to keep your eye on the prize, and if nothing, if nothing's violated to the downside, don't worry about staying into those calls, especially those longer dated ones, right? Especially if you've given yourself time, you've got a strike at the money, in the money, or very close to the money. It gives you a very good chance of having real success and turning a pretty small premium on SOXL into a pretty big profit. So I hope everybody is able to use the information in this video. I tried to make it as short as possible and just cram as much information in as quickly as I could, so that doesn't take up too many people's time. Go to the charts, check these things out. Back test the scalping strategy, and really look at how you would make things work if you were in a trade that day, and see that it really is a repeatable strategy, and it's something that you can be consistently winning with if you just follow the rules. So again, hope everybody has a great day of trading on Tuesday, and look to see you in tomorrow's video.